Hi, everyone, and welcome back to Money Girl's Quick and Dirty Tips for a Richer Life. I'm Laura Adams. My last podcast was an introduction to traditional and Roth IRAs. This week, we'll go beyond the basics, and I'll help you figure out something that lots of people get stuck on: whether you should invest in a traditional or a Roth IRA. First, here's a quick IRA review. If you have earned income or a spouse with earned income, you can contribute to a traditional IRA, to a Roth IRA, or to both. You can even max out a workplace retirement plan like a 401k and still contribute to either type of IRA, as long as your total contributions don't exceed your allowable limit. If you're a high earner and have modified adjusted gross income above $120,000 or $177,000 if you're married and file a joint tax return, then you cannot contribute to a Roth IRA. If your income is too high, you can keep an existing Roth or even convert a traditional IRA into a Roth, but you're not allowed to make new contributions to the account or to fund a brand new Roth account. Okay, so if you're eligible to contribute to either a traditional or a Roth IRA, which one should you pick? I'll summarize the advantages of each one so you can see how they might apply to your situation. I also wrote about the disadvantages of each type, but I just put them on the blog at moneygirl.quickanddirtytips.com so we can keep the show from going too long. Let's start with 4 advantages of a traditional IRA. Number 1, you save money on taxes the year you make contributions, unless you or a spouse also has a retirement plan at work. In that case, the tax deductibility of contributions is reduced if you reach certain income limits. Number 2, you can defer taxes until a time when you expect to be in a lower tax bracket. If you believe that you'll earn substantially less money during retirement than you do now, then you might have a lower tax rate in the future. So paying less tax on your future withdrawals than on current contributions, as with a Roth, could make sense. If you're middle-aged or feel that your career earnings have peaked, it's possible that a traditional IRA will save you money on taxes. Number 3, you have some flexibility about when you'll pay tax on your contributions and earnings with a traditional IRA. You can begin to take qualified withdrawals and, of course, pay tax on them beginning at age 59 and a half. Number 4, you'll never have to worry about being taxed twice. Some speculate that the government could decide to tax all or a portion of Roth IRA distributions in the future, even though taxes were already paid on contributions up front. Since you only pay taxes on traditional IRA withdrawals and not on contributions, as with a Roth IRA, that may give you some peace of mind. Now, here are 7 advantages of a Roth IRA. Number 1, you bypass paying taxes on investments that appreciate in value or pay income. That becomes even more valuable to you if the capital gains tax escalates, which is slated to happen over the next few years. Number 2, you can pay taxes now when your tax rate may be relatively low. If you believe that you'll earn more money during retirement than you do now, paying tax at a lower rate for Roth contributions instead of at a higher rate for traditional IRA withdrawals could make sense. If you're young or just starting your career, it's possible that your tax rate is lower now than it will be when you retire. Number 3, you can pass the account to your heirs instead of having to take mandatory distributions during your retirement. Number 4, you can withdraw your contributions without penalty at any time, as long as you've had the account for 5 years. However, withdrawing your earnings prematurely does trigger a 10% tax penalty. Number 5, you can also participate in a workplace retirement plan without any restrictions. Number 6, you'll have less taxable income during retirement since you're not taxed when you make withdrawals from a Roth. Having less taxable income may reduce the likelihood that you'll have to pay taxes on your Social Security benefits. And 7, you can invest more on a post-tax basis than with a traditional IRA on a pre-tax basis. For example, a maximum $5,000 Roth contribution may be equivalent to a traditional contribution of $6,667, assuming a 25% tax rate. When you're trying to decide what investments to hold in your IRA, those that could potentially cost you the most in taxes are the best choices, like a dividend stock or a bond income fund. The taxes on the annual income will be deferred with a traditional IRA or eliminated with a Roth IRA. More tax-efficient investments, like a tax-free bond, should be owned in a non-retirement account. A major factor in the question about whether you should choose a traditional or Roth IRA depends on what the income tax rates will be in the future and how much money you'll make during retirement. I know, it's impossible to predict what's going to happen with government regulations and your income 10, 20, 30, or 40 years from now, so you simply have to take your best guess at it. If you prefer to have a bird in the hand and save money on taxes sooner rather than later, then the traditional IRA should appeal to you. But if you don't mind paying taxes in the current year, then the Roth has many advantages. And if you're still undecided, why not split your investments into both types of IRAs? To see how your investments would fare in each type of IRA, plug some numbers into the Roth versus traditional IRA calculator at dinkytown.com. And a final quick and dirty tip is that if your employer matches your 401k contributions, you should always contribute enough to max out your workplace match before you contribute to an IRA. I hope you know that there are other ways to get more money tips, news, resources, and advice from me. Of course, there's the Money Girl Facebook page and my Twitter feed, but starting very soon, you'll be able to get a weekly Money Girl newsletter with extra content that you won't find on the podcast or blog. Simply go to moneygirl.quickanddirtytips.com and hit the subscribe button that's located on the top right-hand side of the page. I'm glad you're listening. Cha-ching! That's all for now, courtesy of Money Girl, your guide to a richer life.